Joining us now, David Scott from StoneX. Scotty, welcome back. Happy Friday to you. What a big week it has been, obviously with central banks, potential trade deal there with China and the US, and of course, big corporate earnings out of the States. Let's start with what we heard from the Fed. What did you notice in terms of perhaps a change of tone there from Jerome Powell?
G'day, Andrew. Great to be back. And you're right, it's been a huge week. When you looked at last week, there was absolutely nothing going on. This week, it's been the exact opposite. And I'm knackered. I'm sure Jerome Powell probably is as well, because he's done a really big, abrupt about face, not based on a lot of information and data, it seems. And it's quite unusual exactly what down. Obviously, making the assertion that it was far from a done deal, that they're lucky to go and cut rates in December, pushing back against that really aggressive market pricing. And when you read through the tea leaves, he's expected to go and present the broader views of the FOMC. So the fact that he's talking about far from it, it tells me that there's quite a few members on that committee who were very close to joining Jeffrey Schmidt in dissenting to go and keep policy unchanged at this meeting.
Well, how's this playing out, particularly in terms of futures?
Yeah, so what we're looking at here, it's a 30-year chart. And so this is some real basic technicals, but also the fundamentals play into it as well, because what we're seeing at the moment is that the market tried to go and break out, tried to go and push high yields lower, didn't work out. And then what you can see is that's the UB contract. It's sitting in a rising wedge, which is what's known as a bearish continuation pattern. So it tried to go break out on the top side, failed, and then all of a sudden, I've just got an indicator. It doesn't mean it's going to go and play out, but that's what convention suggests, is that we'll see futures start to go and weaken again, which implies higher yields. And that's where we could go and start to get some ire from the US government about the Fed being too slow, Jerome Powell being too slow at the like. And that's a 10-year note futures contract as well. So you can see at the moment, it's broken its uptrend as well, which is a bearish development. And right now it sits on the 50-day moving average, which has been a very important level over the course of this year. So we'll keep a very close eye on that, but it does point to the potential that we're seeing the low in yields, and then what, of course, that means for the dollar, what that means for the Federal Reserve and the independence questions that were raised earlier this year. That's going to be a really important area to go and focus on in the near term.
All right, how's this all playing out for equities at the moment, Scotty? It was some fairly muted response, certainly as far as the that trade deal between Donald Trump and Xi Jinping. But what have you noticed just in terms of the reaction of perhaps the potential that there won't be another rate cut in December?
Certainly when it comes to those more cyclical areas of the equity market, the Russell 2000, the like, it's starting to go and underperform a little bit. And even you mentioned the trade deal. Whilst on the surface, it's great that you've got the two largest economies in the world talking to each other. When you go and dig beneath the surface, there's not a lot to these deals, to be honest. And it kind of brings us back to where we were in the past. It kicks the can down the road. And whilst the market's got very excited about these trade deals earlier this year, I think everyone's clued on now that this is just basically a PR exercise. That's what it feels like. That go and sign all these really rapid fire deals that would normally take decades to go and actually finalize in full. And we're doing it in the space of days and everything else. So I think markets have gone and caught on to the fact that there's probably not a lot of substance underneath the surface. There's a lot of promises, but whether they're going to be kept beyond the short term is questionable. And so I'm not surprised that there was no reaction. Everyone would expect that there would have been a deal between Trump and Xi, because that's what everything had been lining up beforehand. So when the actual event arrived, there was a buy the rumor, sell the fact outcome, and a bit of a meh response.
Yeah, well, now, of course, Scotty, also some very big results on Wall Street too, that, again, today, Amazon and Apple. Have you taken a good look at that? Because, I mean, in the previous session, obviously, investors expressing their concern of that huge amount of capex on AI.
Yeah, absolutely, from Meta in particular. When it came to Amazon and Apple today, particularly Amazon, they are really starting to go and show the benefits of what's going on when it comes to those that AI play and where it can go and lead to revenue growth. And you see there, Amazon after hours charts at 1 minute tick, so extremely short time frame. But you can see there up over 10%, a big increase coming through. And then more so the Amazon Web Services component growing at an annualized pace quarter on quarter of 20% plus. That's very difficult to go and be anything but bullish when you see that kind of information coming through. Apple as well, again, beat on earnings per share, beat when it came to revenues as well. More excitement in that one, particularly around the services side of the component and recurring revenues coming through. Even though there was a bit of disappointment when it came to actual hardware. But it raises questions immediately when you talk about the bar was set really high for these companies. Well, you've got some big gains coming through. Meta was the exception, and Microsoft even came back to almost flat. So the bar was set reasonably high, but obviously not that high.
And mate, what are you watching on the local market at the moment? Perhaps, obviously the Australian market is underperforming relative to what we're seeing on Wall Street. I mean, that's clearly obviously because we don't have that AI trade as such.
Yeah, exactly. We don't have that component really in our componentry of the market itself. Look, I know there's a lot of quarterly updates coming through at the moment as well. For me, I'm always a top-down guy, and I'm just eager to see what's going on the chart. You're looking at SPY futures here, the daily chart, resting right now on uptrend support. It bounced off that overnight, contrary to what we saw on Wall Street. So I think that there is a bit of positioning for what's going on month end and also what's going on from a technical perspective. If that level were to go and give way, though, it would go and suggest we're starting a new bearish trend. And when you go and look at the weekly chart, which we don't have, unfortunately, the weekly chart has actually got, at this stage, what's called a bearish engulfing candle, which basically is a bearish reversal pattern. If you look at that and you look at what's going on when it comes to the fundamental picture with interest rates, we know how important the RBA cash rate story is when it comes to the local market. Clearly, that's going to be less rate cuts coming through than what we thought. It's looking a little bit toppy for the local market and very excessive valuations as well. If we do see a downside break, it would not surprise if we see a decent downside flush.
And just finally, Scotty, what are your observations about what you're seeing in currencies at the moment, where the US dollar is and how the Aussie is responding at the moment, particularly, I guess, off the back of the prospect that we're not going to get a rate cut next week?
Yeah, against the crosses, Aussie is performing relatively well, although it still really is a play on broader risk appetite at this stage. The interest rate differential story is only a very minor aspect of what's driving the Aussie. When it came to the euro last night, ECB kept the depot rate at 2%, no real change there, no real guidance as well. So not a lot going on with the euro. It is pretty much what's going on with the US dollar, and that's starting to go and show signs of potentially moving back to the highs that we saw a couple of months ago. Still not any sign of a breakout at this point. But the yen is the really interesting one. Yesterday, of course, BOJ leaving policy rates unchanged at 0.5%. But it was what Governor Ueda said in his press conference, saying that they want to see more information about what's going on in the early phases of the spring wage offensive. So that's talking about 4 or 5 months away. Markets have got a full hike pricing for the BOJ over that point of time. Really dovish commentary, and it has broken out. So the yen looks like it wants to continue to go and move higher. We'll see how Scott Bessent enjoys that one, because clearly during the week he was trying to go and coerce Japanese officials to go and strengthen that yen.